As my thumbnail says, I look for stocks that have increasing revenues, increasing earnings, and depressed prices. I honestly believe that I'm in a position comparable to what I experienced in the dot-com bubble. We have in front of us a opportunity that is being shadowed by what's happening with artificial intelligence. We recognize that NVIDIA is doing extremely well and selling as many semiconductors as they can make, and Supermacro has benefited from that as well. But we actually have a very depressed market in the rest of the semiconductor world. Oh, Micron Technologies is doing good, but because of the collapse of the EV market, because of inflation and higher interest rates, the rest of the semiconductor market is not doing well. And I've identified a semiconductor that has the company that has increasing revenues. I mean, crazy increasing revenues, and increasing earnings, although their increase in earnings are decreasing losses. But their price is depressed. And I tell you, the price of the stock, I believe, in the next 2.5 years will go up 2,860%. A current price of about $4 a share. And I believe by the end of 2026, it's going to be at $117 a share. Now, if I'm off a little bit, please forgive me. But I want to show you this. And I think it's an opportunity. If you'll recognize, you don't want to be buying stocks at their high, like NVIDIA. You want to be buying their stocks at their low, who have had a good track record behind them, but because of some extenuating circumstances, they are depressed right now. Let me take you to my computer and show you this. First of all, let me start by saying this is a chart that I have put together on about 40 stocks that I track, and I'm trying to project their prices based on their earnings per share and their revenue growth as to what their price is going to be in January of 2027. And how I do that, and I'll show you here, is I build a history of what their earnings have been, what their stock price has been, and how those two interrelate. In other words, for every percentage point that the earnings per share go up, what percentage of does the stock price go up? And I build that history. And then what I do is I say, okay, now how do the revenues compare to the movement of the price of the stock? And then I go and I dig up what the projected earnings and revenues are for the coming 3 years, and how do those projections relate to their historical PE ratio. I put those numbers together in an algorithm, and I predict what the price of the stock is going to be in the future. Again, based on the numbers that I pull out of the data from their earnings reports and their projections in the future. Let me show you exactly how I'm coming up with this stock, who's going to give me a 2,860% return as their stock goes today from $4 a share to what I believe could be as high as $117 a share in the next 2.5 years. Okay, here is where the magic happens. This is an Excel spreadsheet that I've put together. I've got about 40-some stocks that I analyze here. And here you can see this is Modine, this is Microsoft, Micron Technology, NVIDIA, NVTS, On Semiconductor, and Oracle. What I want to focus on, though, is NVTS. This is a smaller, relatively new semiconductor company. As you can see, I have their earnings going back to 2019. And you can see it being new, they're losing money. They were losing $1.20, $1.17, went all the way up to $3.90, down to 28, down to 20, 23. And this is actually a 15% decrease in earnings. And now they're going into 2024 with a negative 23, projecting a negative 11 in 2025. a -4 in 26, and then a +51. And this is where the company is going to explode. But recognizing that now is the time to get in, because it's right now selling for $3.91 a share. And then at the same time, I'm looking at their revenues. Here you can see they had 1.7 million, 11, 23, 37, 79, 100, 160, 242, and 450. That's some explosive increase in earnings in revenues. So you can see down here, I'm showing the percentage wise. So what I see here is a stock that was growing, came into 23, and because of their dependence on the electric vehicle industry, their losses went up in 23, and the market has punished them. They started the year with a price of $7.63, and as you can see right now, it's selling for $3.91, so it's almost a 50% loss. And with that in mind, then what I'm looking at is saying, okay, this is a depressed stock. It was doing fine. It found its niche. It was bringing its losses down, and now it's depressed and it's down 49%. So, but I recognize that they're projecting their revenues to increase by 26%, even this year. And then next year by 61%, then by 50%, and then by 85%. All right. And I am of the belief that if I put these numbers, and what I have done is build an algorithm, and based on the numbers alone, the data that has come, no feelings or wishes or cloud on nine, I believe the stock, if the market turns around, if Jerome basically lowers interest rates, this stock could end up at $9.05 by the end of the year. Okay, then with its increase in or decrease in losses of 52% in 2025, that could turn into $14.29, and then with that decrease to 4 cents from 11. That could turn into 117, because in 2027 they are projecting a 51-cent profit. That's going to take this thing and explode it. Okay, so that's how I do my projections, and I left NVIDIA up here just to show you. That's how I do it on every one of the stocks that I have in my BUS 12 and BUS 13 portfolios. And then I share this, and you'll see as we sit here that these numbers change as the price of the stock changes, because this is a live chart. It's tuned into the stock market. Then what I do is I take this, and this is what I was showing you earlier, and I do it for each one of the stocks that I hold in the BUS 12 and BUS 13 portfolios. And again, we look down here and we can see here's NVTF. I anticipate that the money that I have in it will, by the end of the year, turn into over $500,000. And I'm adding to it because the market is continuing to depress this stock. It's down today, so I'm buying another 1,000 shares. And this is what I do for the entire stock market. Now, what I do is I share this on a daily basis on our website for our platinum members, which is $60 a month. What I've then done is so that more people can have access to it. Once every 2 weeks, I send this out to the Premium Plus members, and that's $20 a month. And I include my projection for 2025. I do not include my projection for 2024 or my projection for 2026. And you get an update, as I said, on the Premium Plus at $20 a month. Every 2 weeks. I do that because I think it's so important that you come to understand the data that is available to you. That's what this is. I just go and go dig up the data, put in the numbers, create the algorithms, and make my projections. And am I confident of the projections? Do I feel confident that NVTS will hit $117? No, I'm not confident of that. But what it gives me is how is it going to perform relative to other stocks? And what is the basis of the performance? And the basis of the performance is the data that I'm able to extract as to what are their earnings going to be in the coming years, and what are the revenues going to be in the coming years, and what does the historical data tell me that if those earnings and those revenues are met, how that's going to translate into a stock price. And that's what you see right here. And there you just saw a change because NVIDIA and Micron's prices change. This is what I want to share with you. I don't want to give you blue sky of this is what Jensen Huang said. I want to bring it down to facts, to numbers that are based on history and based on what Jensen or the CEOs of these various companies tell me their earnings are going to be in the future. And then I can always go and look and see how accurate have they been with their projections in the past, and thus put another measure of accuracy on my projections. So if you want to be a part of this, it's all part of getting on the bus. If you want to get access to all this information, then you join the platinum level. If you want to get access to it every 2 weeks, then you join the premium level at $20 a month. You are, luckily, at the investment opportunity of a lifetime because things are coming together. Because we do have depressed stocks. This is comparable to after the dot-com bubble, Amazon going from prior to the dot-com bubble at $97 a share down to $9.75 a share. That's exactly what's happening to NVTS. It's almost a mirror. They've lost 50% of their value since January the 1st of this year. And they'll probably lose some more in the coming months, but I believe they'll be back up to $9.05, which would be a 14% gain over their price of $7.63 on January 1st of this year. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I just want to make you a better investor and help you make better investment decisions. And I can do that, and I can share the cost of my research by you becoming a part of our team, our tribe, and you do that by getting on the bus.